Cedar Rapids, it's taken over. They're almost dominating that whole market over there as far as loans. And I think there's a great opportunity with it because it's a great lead capture, and it's a great way to sell additional homes. One way that I've seen what they've done is, for example, is someone has, let's say they have $30,000 in savings. Instead of putting that down, they'll take, and someone in their 20s, they'll take that $30,000 and maybe pay off a student loan with it, or a couple car payments, or debt they have, and then they go out and get the 100% financing. And my understanding is a 90-10, and they'll explain more about the details. So they've made things work like that, where just getting rid of some of the student loans or other debts to put them in 100% financing. Now here's where it's hot. We're in such an exuberant market now. This won't last, and this is a pretty hot market. But this 100% can really attract leads because it's the only place that I know that has it, except for USDA. And in 2002 and 3 and 2001, I used it all the time to attract buyers. I mean, I would put stuff out there. I had flyers at the listings. I would have stuff online, and it just drew in a lot of buyers with it because they're like, wow, 100% financing. And a lot of them would have 10% or 5% or 3.5%. Maybe they go FHA, but they were calling me instead of another agent to find out about it. So I think it's a good lead capture thing to do, and I would do it with flyers. They have 100% financing signs that you can put in the yard to attract calls. And I think as this market kind of cools itself off over time, I think it's going to be more and more valuable to put things together. Now the 100% financing, it's in-house, so they're loaning their own money. So they're not really going off any secondary market guidelines or anything like that. They're going through it and making a kind of a decision. They'll make it work or not make it work. So that's one of the key. I think they're coming in right now. But one thing I wanted to ask is I wanted to see if anybody has stories like this. This is what I'm hearing in the market. Okay, so let me know. So agent has they make an offer on a townhome. Yeah, come on in, guys. I'm just going to go through one thing, and we'll go ahead and start. So I want to see if anybody else has stories like this. The townhome was listed for about $160,000. 5 months earlier, one sells identical for like $158,000. Okay, so now it's listed $7,000 more 5 months later, a different unit. Okay, multiple offers come in, and it sells for above $170,000. Has anybody else seen a lot of that? Or do you have one, like an example that you can share?
I have a couple that's happened with, and then one of them we have appraisal issues.
Were you on the writing side?
On the
purchase side, or
yeah.
Purchase side?
Mm-hmm.
That's a good way to protect the clients that they bid too much. What was the list price, and then what did it sell for before they?
I think we were on like 5,000 over.
They went 5,000 over.
Mm-hmm.
In what price range?
Like 125, 120.
That's
just
good,
listed like 119.
That's a good size jump. Anybody else?
We could just add one.
You do? Go right ahead.
It was listed at 142. We bought it for 142 with 2,000 in closing costs. I told the buyers that it probably wouldn't appraise for the 142, and it came back at 140. We're kind of in the middle of it. I asked for a price reduction. And the agent's sharper than I thought because they said that, you guys actually got it for 140 because you got the $2,000 off. And ours is a cash offer, so we might not make it on that one, but we'll see.
Julian?
We had one that was listed at 186, and we put closing costs on, so we were at 190, accepted offer, and the appraisal came back at 175.
We are getting that price.
Wow.
Okay.
So
this short inventory and how hot the market is, it's like this across the country. I mean, maybe not Albuquerque, New Mexico, but like Indianapolis and Omaha and places like Albuquerque is pretty bad right now. It's kind of surprising. That's why I bring it up. And, I don't think I've ever been there.
Things you need
Oh,
to
nice
know.
question.
But I heard it was, high crime and they can't sell real estate. So, but it's everywhere. So there will be, this is very exuberant. This will not last. This is not normal. So in probably 12 or 18 months, just be ready, keep the fundamentals right because there will be an adjustment. Most likely if they start raising interest rates or something and as the inventory increases. So anyway, why don't you guys you can sit there, you can get up and talk. I'll turn it over to you all about this 100% financing and I'm sure that everyone's going to have some questions.
Okay.
Yeah.
Super.
Yeah, so I mean, we didn't come with any set agenda other than just to talk about what, the email that came over, which was our in-house portfolio. We can do 0 down. So I guess kind of open it up, just do a Q&A type thing. We can answer any questions you have and that will probably spur some other conversations, so.
How's the first and,
Oh, go ahead.
I was just going to, it's the first and second, right?
Correct, yep. It's structured as a 90-10. So 90% of the price on the first, 10% on the second. Rates are going to be based on credit. Top tier 740 and above. And then there's 3 different products that people can choose from for that first mortgage. They can do a 5-1 arm, a 5-5 arm, or a 10-1 arm. The 5-1, 3.25%. The 5-5, 3.625, and then the 10-1 is 3.875. That's all that first mortgage at 90%. There's no mortgage insurance. What we do with the second then, we add 0.75% to the rate. So whatever the rate is on the first, if they have 740 above credit, then we're going to bump the rate by 0.75%. And then the second will then have the term will mirror the first. So if they have a 10-1 arm on the first, they're going to have a 10-year balloon on the second. If they have a 5-1 arm, they have a 6-year balloon. It meets a different regulatory. That's going to be 0.75% higher.
What's the adjustment on the 5-1 and 5-5?
All the adjustments are the same. 2% max per year, 5% lifetime max. There's
Based on
based on the 1-year U.S. Treasury.
an allowed margin. It's 2.75%.
2.75.
Yep.
Yeah, so 1-year U.S. Treasury, the 2.75 margin. It does have a floor rate. The floor rate's 4.875. So most people don't keep these beyond that initial lock period. They're gonna flip it into either a new in-house portfolio loan or they'll maybe flip into a traditional 30, 20-year, etc.
We run a lot of promotions as well. Usually every 12 months, every calendar month, we will flag our members that either we think are in a situation where they could do a quick refi, or we have our in-house loans where on the retail side they can switch into maybe we do what's called a free and 10-year loan. Sometimes they switch them to 15. That's another thing to kind of throw in the mix with them. It's not something that they're like, okay, gosh, I'm not comfortable having that adjustable rate, but I don't want to use my money for down payment. That's something you can let them know. Hey, there are options and programs that we do put in place for them down the road for them to switch on over as well. So that's another advantage. The in-house too, much like Patrick was saying, there's a lot of flexibility with it. I always say it's a case-by-case basis. So if you've got a borrower, maybe not strong credit, co-borrower has strong credit, or maybe no credit at all, we can use that credit score. Maybe someone doesn't have credit, or we can roll in like a third borrower or co-signer, like a mom or dad, to make sure to get the deal done. I've had situations too where recently we had to add a mom, basically just get more income to qualify. We'll do a release of liability once they either A, credit gets up, or maybe more income to qualify. There's no cost. It gets mom or dad off the note as well. So just something to kind of throw in the mix. Yeah.
So when we walk outside, I'm not going to punch Mike in the face because he just said, just kidding, I'm not going to, but he just used credit as a good opportunity. So I just want to clarify what he said. Because it's in-house, because of portfolio, if credit is a challenge, as long as we have a really good co-signer, that's something that can help. We can still help put something together. But one thing, just to clarify, if somebody doesn't have good credit and they don't have a co-signer, they're not going to be able to get qualified for any loan. I mean, whether it's a 30-year fix or it's one of our in-house. So just wanted to clarify.
Keep that on there, super. Yeah.
So 740 is that
Is the bar there? That's the 8, yeah.
That, 740 gets you the best term.
Okay.
680 is really what we like to see. 680 and above, there's a real good chance they're gonna qualify. They might have an adjustment to the rate, of course. Below 680, it's tough to get 0 down. Probably gonna ask for some money down. Again, unless, like Mike said, we got a really strong cosigner, then that might open it up again.
Okay. Do you have any kind of a deal? Let's say one of my buyers buys a house with no money down. 3 years down the road, they want to refinance. If they go through you, do you have any kind of package that they can go through you and save money as opposed to going to a different lender, say appraisal fees?
Every loan we do is a package, basically, meaning our closing costs are gonna be lower than anybody that's out there, whether it's when they buy or whether it's when they refinance.
Typically, then what are your costs?
$1,600,
That is cheap.
and a refi, they're even less.
No origination fees.
There's no origination fees, there's no points. 1,600, and right now we're guaranteeing on a purchase that 1,600 max closing costs.
And that's appraisal fee.
That's everything.
Plus, everything.
It's appraisal, it's abstracting, it's title, it's our fees, it's recording fees, it's everything. So,
And we close our own transactions. We act as the settlement agent, so that saves the buyer $200-300 depending on, whoever, usually does them, so.
And you escrow for taxes, I'm assuming.
we do.
Good.
If people can still use one of the portfolio loans if they have a large down payment, but we kind of follow the same rule secondary market, which is 20% down, and then if they want to choose to not escrow, they can, but anything less than that, we're going to require escrows.
What do you have for fixed rate financing? Because I think the 100 you were talking about was adjustable.
Correct.
What's the best fixed rate deals you've got? Are they in-house or are they just traditional?
Traditional.
Okay.
Yeah, traditional, so, but again, not only are our fees low on in-house, our fees are low on our traditional mortgages as well. You just have to have 5% down minimum. But then if you look at our rates versus anybody else, typically they're gonna be lower. That's our business model. Our business model is to be the leader when it comes to rates and fees for our members of the credit union. So if you have somebody who is rate sensitive as a buyer, fee sensitive, then we're usually a pretty good outlet for that.
And then you have to join the credit union, right?
You have to become a member. So we're a community chartered credit union, and so now that we are in the Des Moines area, as long as you live or work in one of the counties that we serve, which is basically Polk, Dallas, what's just west of Dallas County?
Guthrie?
Guthrie?
Guthrie, yeah.
Madison?
We go Madison, yeah.
We go Madison.
Warren.
Yeah, basically take 2 counties plus in every direction from the general area.
Story.
Yep.
Story.
And then
Green County's in there too.
if you kind of angle to the northwest, or I'm sorry, the northeast and the southeast corner of the state of Iowa, that's kind of our membership area currently. Again, as long as they live or work in that area, then they're eligible for membership.
And do we have to get payroll paid into you and also pay a mortgage or?
The minimum requirement, put $5 in a savings account. Now, we don't earn money on that, right, as a credit union, so we encourage, and we do a lot of cross-sell, of course, so we're going to try to get them to become active members. That's how we're able to earn revenue and keep offering low rates on the loans and no fees and all that, so.
What about refinancing, or like when they're purchasing, let's say they have some car loans or student debt or something that can be refinanced to lower their payments on the consumer side? Do you do that?
We do look at that, yep. And that's, most of the time when we start on the path of home buying during the financing, our retail side will look over some other accounts. If there's other opportunities like a lower rate on an auto loan, or maybe there's a credit card they can pay off, and we can basically shift payments around to maybe make something work that otherwise they may not be aware of as well. And that also works to our advantage, especially if we are trying to get a deal closed or get something to work, or maybe they've got a different opinion from maybe a bank or somewhere else. We can actually work some things up to make it work in our favor to get them qualified as well.
So when they do the consumer or retail side, did they visit with someone else at the credit union? Right?
Correct. Yep.
And that'll be a lot easier, of course, in 30 days once we have a physical location here in the area, which everybody knows, June 19th?
I say June 20th.
June 20th is kind of
Just drove by there. I don't know how they're
projected
gonna get
date
done.
that will be in there, but it's coming soon.
Where's the location?
You know where Jordan Creek Mall is? It's the corner of E.P. Drew and Jordan Creek, right on the southwest corner there. Mhm.
What about non-owner occupied investors? Do you have a program for them?
Not specifically. So non-owner occupied or investment properties, we can either take those secondary market, which on average, 20 to 25% down payment required, and then it's a bump of about 0.5% in interest rate typically. Or if we do them in-house, we need to flip them over to our commercial side. We have a commercial lender. So.
So with the commercial lenders, will they do like a rehab investor loan? So I could go buy a house, get it, rehab it, and then finance out at the end?
Probably not, as that product probably is not one of our strong suits, I would say. Yeah. One good thing to know with any of our in-house loans on the mortgage side of things, non-warrantable condos, we're cool with those. We don't require that they pass the Fannie Mae checklist of all the different, so many have to be owner occupied, the association has to be turned over to the owners. You gotta have all these different reserves, which can be a real pain, of course. We don't require all that with our in-house. We need the buyers to qualify for the financing, and we need the property to appraise. And we'll do 0 down on those.
So, very good, very good. What, so $1,600 of closing costs, you got good rates. What, but you could still do, you still do in-house if it's 20% down or 25, but those would have adjustables, like a 5-year, or 7-year, or 10-year.
Yeah, if they're gonna go in-house, it's either the 5-1, the 5-5, or the 10-1.
Got it.
Yeah. Most people, if they're gonna put 20% down, they're gonna look at a 30 or 15-year fix naturally, but unless, again, it's a property issue with a condo, most likely, that's where things can kind of prevent. So what we typically do, if anyone's buying a condo, we'll say, hey, option A, your traditional 30, 15, 20-year fix, whatever. Option B, though, just so you have an option, so it won't blow the transaction up, is we just need to make sure they're okay with one of our in-house solutions. So we position that usually.
Very nice.
Our in-house can be pretty flexible in a situation too, when you've got a buyer that hasn't sold their current property, and if they don't qualify for, say, 2 house payments, we can actually structure in a way to make it work too. If they've got either equity in the home, or if their ratios are pretty high, because we have to count those 2 house payments against them, we've got a program or an outlet for that. It's an in-house, but it's a way to, if they find the place they really want instead of missing out on, we've got an option for that too.
Yep.
When you do the in-house lending, is that done on the traditional settlement statement?
Yeah.
Correct, the old days?
Yep.
Okay.
CD?
Instead of the CD?
No, we use CD. Yeah,
Right, you
it's
don't in-house. Okay.
CD across the board, yep.
Okay. I've seen some banks that are still using, and I know you guys aren't banks, but some banks that have used, maybe it's more on the commercial side, they're still using a HUD.
There.
And I don't, it wasn't your folks, but I was just kind of curious, I kind of thought that would, I know cash or contract sales, but I've seen some lenders, some banks, some community banks use that stuff. I didn't know if there's different rules with it or.
As far as our understanding, it has to be in order for us to, at least that's what our auditors and the team says, we have to follow that, so.
So if an agent has a client that wants to visit with you, what's the process? I mean, how do they fill out the application? How do they get started to get pre-approved?
We've got, multiple ways. We've got our own websites, of course, that we have instructions where they can apply online. Or if they, if you've got someone who wants to come in, meet face to face, we just schedule an appointment with them, come on in to meet with us. That's traditionally, I guess, the 2 methods that we go through. When I talk to them, I just let them know, hey, whatever you're most comfortable doing, just let us know, because if you prefer online, much in this day and age, it seems like everybody, uses a computer for the most part. But and then also with the time crunch, as everyone in here knows, getting out there and finding the right property, or if there's a hot property that's I gotta get this offer in, maybe the online method's the way to go, just to speed that process up. So.
Yeah, I can see that. Maybe like some of the emerging markets, perhaps might want to be in person.
Certainly, yeah, because I've got a 2 o'clock today. He's, they're an elderly couple, retired, so it's more personal, face to face. So, have them come on in. We'll sign documents, in person. That way, they don't have to go through the e-sign. So it's more convenience, of course.
Right.
So when we get given a pre-approval letter from your company, like someone writes an offer, here's a pre-approval, how secure is the pre-approval? What have you actually done before you issue that letter?
We've run credit.
That's a good sign.
We've looked at the information they've supplied, and we've had some sort of communication as far as either a phone call or an email, kind of confirming what they gave to us as legitimate.
Have you got if you have copies of the tax returns at that point, or just based on what they're telling you?
Based on what they tell us. Mm-hmm. Now, on occasion, and there's no black and white rule, right? Every person, as you guys know, is unique in their situation. On occasion, we'll say, no, we need to get that. We need to get the tax return, especially if there's somebody who has self-employment income, because it's nice come tax time to write a lot of expenses off, so you don't have to pay as much taxes, but we have to use that same tax return for loan qualifying. So, and that's in-house or secondary. We have to use what's reported.
So you can add certain items back in on the self-employed.
What's that?
You can add certain items back in and increase that.
Right. Depreciation.
Okay. So if you issue a pre-approval, you've at least pulled credit and reviewed the credit report.
Yeah.
Look, we've had a few come through that haven't even done that. Kills us.
Really? I didn't even credit report. You had some lenders, they don't even pull the credit report and give you a pre-approval?
Mm-hmm. Quicken? Twice?
Quicken?
Gave them a nice quicken.
I hate Quicken. You verify. I take it away, Quicken right away. I don't do it. We don't do that. You verify their down payment?
On the pre-approval?
Mm-hmm.
We don't
Do you ask?
We don't typically get any verifications up front. You can kind of tell, after credit is such a good indicator. You get someone in that gray area of credit, then that will prompt us to start asking more questions, maybe seek a little more information. Someone with really clean credit, usually everything just lines up, so.
How often do you get surprises? Because as an agent, you get the pre-approval, they filled everything out online, credit looks okay, stuff like that, looks fine, it's not borderline.
Mm-hmm.
And then you rush out, and you've been working with them for like 75 days or whatever, trying to find a house, you've written 8 offers, you finally get one accepted. And then all of a sudden they start supplying the information, and now their down payment or income is not what they said. Is that a common thing, or are people pretty legitimate when they say they make $7,000 a month, it's $7,000 a month? Or do you get things where they say they made $7,000 a month and you find out they made only 3?
I've seen.
It's you kind of tell in the industry. Certain industries, people tend to do that more than others, So it comes up. I don't know that I would say it's common. It happens. I will say too, I've been doing this about 15 years, and it was way too easy to get along 15 years ago, right? Anybody could. And then it got really hard, and then it kind of loosened up a little bit. In the last 6 to 8 months, since the new regulations came into effect last fall, underwriting has kind of gotten scared again, and so it's tougher to get qualified today than what it was, I'd say, 12 months ago or 2 years ago. People still qualify, but there is a lot of documentation and very specific requests that are required, of course. So I know Mike does the same thing I do on the front end. We try to just coach people that we're going to ask for some things that may not always be logical, but because we have to get it to meet the different regulations. So.
We've got our own underwriters too, right in our financial center in North Liberty. So if I'm on the fence about anything, I just call up Angie, say, hey, here's what's going on. Here's XYZ. What's what I've got here. What's your thoughts? Because she'll flat out tell me I don't like it, or this is what I want you to provide, and that's when we'll get documentation to verify. First time buyers, I think either they've got a lot of their ducks in a row, they've got everything that's needed, but sometimes you're going to get the ones that are like, okay, don't quite understand the process just because this is all new to them. So try to, like you said, coach them through the process there. But yeah, I've seen instances where they've inflated their income or said their assets are there, and then we'll get, okay, where are the assets at? So we have to backtrack here, take a few steps back, either get a gift from a relative or figure out some way of making it work. So, but that's where, like you said, it's more coaching. I think it's kind of case by case. Usually first-time buyers, though, I don't say pretty hard on them, but I want to make sure that, what they're telling me is the truth, obviously. So that's the big thing is I'd say some documentation, but my underwriter, she's a government underwriter too, so we get, she's going to cover more bases, I think, than maybe some other underwriters. So I've kind of been conditioned in a way to get a few extra more items to make sure we're clear to move on to the next step as well.
Used to VA?
We do, yep. VA, USDA. He's all that's, that's.
Honestly, we had to make a decision as loan officers a couple months ago, who was going to do and who isn't. And I just decided.
And he got the short straw, right?
I didn't even ask him, I just knew it was going to be, so,
Which is fine.
So-
I mean, VA is a great product. I've done a lot of VA years. VA is really good, especially if you have a disabled veteran. And so what we do, if that person comes to me and I find that out, I just make a warm referral over to Mike and he can run with it. So, honestly, a lot of those other programs, with IFA, the MCC credit, some of those other things, you guys can really appreciate how many of those you have to lay closings on, right? Whereas our in-house zero down is so strong with no mortgage insurance, still such low fees. Usually that's as good or maybe even a better solution than what some of those other state-sponsored, government-sponsored programs can be. So, anyway.
It's hard to fight USDA and VA because it's the same basis, we get no down, that kind of thing. Is there a process that you go through? Is you have somebody come in, they apply online or in person or whatever, and you get them to the pre-qualified stage, which is we check credit and that kind of stuff. Do you move forward with those people at all towards pre-approval stage prior to them having a purchase agreement, or is it pre-qual and then loan out from there?
So, to make sure I'm understanding your question, so we've got their application, we've run credit, and everything looks good, and we've provided a pre-approval letter.
Yeah.
Now
See, everybody likes to call that pre-approval.
It's using no terminology.
That's pre-qualified on my book, but go ahead.
So
Go ahead.
typically from there, then we then hang tight until we hear back from you or from them that, okay, now they have an accepted offer. And then at that point in time, we want to find out timeline, which right now I would say 45 days is a good timeline on new contracts. Hot market, of course, this time of year, it's tough to get things done quicker than 45 days currently. So impossible, no, but challenging, yes. So once we know we have an offer, then we're going to get together with them. Okay, and a lot of times too, even before this point, we'll tell them, here's the documentation we're going to need from you, so they kind of have a heads up. Start planning, tax returns, W-2s, bank statements, pay stubs, all that stuff. Okay, now we're ready to get that. We need to set a time to get together. It is hugely beneficial if we can have at least one face-to-face with them on the front end somewhere along the line, just so they can put a face with a name, because then when things do get tricky as we move along, they know that we're actually real people, and we get a lot better response when they've met with us than just always the email or phone call type deal. So, did that answer your question?
Sort of, yeah. You're providing pre-quals.
Unless it's gray. If it's gray, then we might get a lot of documentation. I just had one of those yesterday. I had gotten all of their stuff 2 weeks ago because I was uncertain. So we sent it in underwriting ahead of time. Underwriting looked at it. Yep.
And you're asking about you're asking about the commitment letter. Is that what you're looking at? Yeah, we can get those fairly quick. It's just that once we get the pre-qual, obviously, we get the contract and then we can issue it to underwriting. Most of the time they want to wait till that appraisal piece is back though, so they know the value's there and whether it checks out. That's most of the time.
Yeah, that's final commitment. There used to be a step in between.
In between there.
And that's kind of gone away. And it's a little frustrating because when I look at a pre-approval letter and it comes in and it says, we've checked your credit score and it's based on what you've told us.
That's a
And I'm like,
pre-qual.
that's a pre-qual. Yeah, it just is, and I understand, but
You know,
it's
the
still
issues,
pre-qual.
yeah, and it's really playing out because I mean, you're rushing out, you're watching the sheet, what's coming online, what's coming on the market, it comes online, everything's dropped, everybody's running to the house. And then you've got a bunch of these offers, and sometimes you're writing 2 or 3 offers before you find something. Then you get them approved, and then you go 3 weeks later, and something comes up and it dies. It's, you know, the list side or buyer side. That's why Lance is kind of bringing that up.
Well, specifically from the seller side, it's very frustrating that we can't have it just a little bit. You know, and on a rare occasion, I'll see one, and it doesn't say based on what you told us.
You guys are really can be as much or more help on that than what we even can, because you're gonna have that relationship and the rapport with the client before they even get to us. If you think there's some of the indicators going off, I'm just, you know, you're not 100% comfortable with what the person's telling you, tell us. You know, just let us know, hey, here's an opportunity, but I want to get this person qualified, maybe additionally qualified before you guys even provide that approval letter.
That's what I was gonna ask, does that bother you? Because I always advise my clients to bring all of their information.
No, that doesn't bother us at all, as long as they know some of that stuff's date sensitive, so they might have to, if they bring it to us, they get pre-qualified today, we might have to get that same information again 2 months from now if it takes a little while.
At least
But
you've seen it up.
no, there's no problem with that.
It'd make our job easier, actually, to make a decision to help them out too, with having that documentation.
And honestly, it usually helps them move along quicker in the process too, if they know.
Yeah, I think the challenge is, we run into the same with you guys, right? If someone calls you and they've already found the house,
Oh, yeah.
and they want to write, but they need to get approved, and it's like, go, 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 and we get the same thing, like, hey, I need this, I need to write, and it's like, okay, we'll move as fast as we can, and we're basing it off of limited information, of course, so, again, I'll put it back on you guys at that one. I mean, we're all involved, of course, but
Yeah.
we do offer a closing guarantee, $500 that we're going to discount their closing costs even further if we miss a closing date. Now, somebody misrepresents what they told us. It's not really on us, but if there's something on our end, it's, hopefully you're not hearing the UI Credit Union name associated with these when transactions are falling
It's
through.
just cross the board with everybody. It's
Yeah.
just, you know, it's, pricing a little bit more.
Absolutely. There is that difference, and the market here is starting to recognize the difference that that you guys do have an in-house product that might have a variable that would get somebody qualified that it made sense to loan to. When we're working with most other lenders, they have to fit inside the box, you know. And so, I mean, we, you know, as agents, we appreciate that. We just had one come in the other day, and it said, the original offer said FHA or portfolio. And I'm like, okay, who are you talking to? Because the original pre-approval letter came from Bankers Trust. No, it came from Wells Fargo. And I'm like, yeah, okay, they don't have a portfolio, you know? So we questioned, and finally it came through, and it said, oh, it's this guy, Patrick St. John from University of Iowa Credit Union. And I'm like, oh, that makes sense.
I heard
So we questioned it highly, but you know, figured it'd be okay.
You didn't quote steer him somewhere else again.
Yeah, right. No, it was on our listing, and so once we confirmed that it was with you guys, then I was much more comfortable that it could work.
What about communication? So, get the pre-approval letter, write the offer, get it submitted, you guys get the purchase agreements. What do you guys have in place for communication with the agent and the client, the buyer, the borrower, between offer acceptance to close date? Do you guys have an automatic system that you get so far, there's things coming out, or letting everybody know what's happening through the process?
We will.
Okay.
It's in the works.
Okay, that's probably pretty.
To be totally honest, that is a definite area of opportunity for us. As you guys have heard, I mean, that the word is spreading, right, that we're here as a company. We do things different than pretty much every other bank or credit union that's out there. So our phones are blowing up right now. And so, again, it's an area of opportunity where we can definitely improve upon that. I think when we do get that automated up and running, that's gonna help tremendously. Right now, I think we do the best that we can, keep people informed of pertinent information when it comes up. So,
I think I actually sent you that video of that one lender that we were working with. I think I forwarded that to you. It was like, at every step, they have a video that goes on. It was cool stuff.
It's cool for the consumer.
Huh?
It's cool for the consumer, but I got that video, I get a reply and said, I'm not watching the video. Has it passed appraisal? Yes or no?
It's nice to know it's that though.
I'm still watching the streaming video.
You have to watch that.
Has it passed
If you get the video, you know you're separate.
I thought it was the only one that felt that way. Somebody get this video?
I got it.
I don't want to be there.
No, but seriously, the video says congratulations on the next stage. Click here. No, just tell me what stage you're at.
Yeah, this is.
I told the loan officer, you know me correctly, or that's the last line.
Under the videos, it had the pertinent information
Yeah.
right below the video. But like you said, the video's designed for the consumer,
Yeah.
and it takes them into the next thing, explains what's going on. But it was really cool.
It's nice fluff.
It was nice for the
Then we don't
consumer.
have to explain as much.
Huh?
I liked it because we don't
Yeah.
have to answer as many questions.
See, I'm a control freak, I like to explain it.
I don't want to explain.
Now we know what's going on at all times.
Wait, who's your appraisers? Do you have to go out to a central thing and get a random, or do you have your own?
Yes and no. We have our own. They're approved through us, but we don't pick them directly.
Through a third party.
It goes through a third
So you
party.
have a block of names that you do use though, that you can dump out when they're bad. Cool.
Are you seeing appraisal issues come back?
Yeah, we haven't. I haven't.
I had one where
It's coming.
they went through Quicken, house appraised 300 grand less, and then we met value.
How much?
How is that even possible? I don't know, it was an Echo Valley home, came in at 680. We appraised above, but now the buyer is scared because they don't know what's what, so.
Obviously, the appraisers.
Well, yeah, that's what we told them, and yeah, so we're waiting on a response, but that's the only one I can really think of.
Sold for 980, appraised for 680?
It was home show home, agreed to buy for 925, and went through Quicken, came back at 680, and I just asked who the appraiser is, but they didn't, couldn't have been someone local, so we had, someone local come out there, I think it was with Raleigh, and got the value, and now we're waiting. That's what I was telling Patrick on the way over here. I'm like, kind of scratching my head on this one. So, yeah. So
Appraisal on Craigslist. Question about your appraisals. Are they, when you do the in-house, is it going to be similar to FHA? So if there's paint that needs scraped, okay.
No.
Just get past that. Because a lot of times in the lower price homes, that's what you're going to end up with. A lot of that.
Yeah, it still has to be a certain standard of home, and kind of take a step back, look at that from the credit union's perspective. If that loan goes bad, is this an asset we can then sell? And so if it's a dilapidated home, regardless of whether it's being paid or not, that's probably not something we want to put a mortgage against, regardless of down payment. We just don't want that asset, right?
Well,
So
depending on where it's at, we probably have an investor that'll buy it.
there you go.
If it's by Drake, Robb will buy it.
There you go.
No.
You have to ask
Randy will sell it.
So here it comes, Rob.
Randy has a catalog, don't you?
I do. Custom made. Inside joke.
It is.
So would you lend for someone to build a house?
Yes,
So if I bought some land and want to build a house, you'd lend me?
yes.
Maybe?
No, you have to.
Well, not you personally.
You have to qualify.
Let's see those tax returns.
Construction loan? Construction loan, yeah. Again, the rate's based on credit, 740 and higher. It's a rate of 3 and an 8 during the construction phase. We'll loan up to 90% of appraised value.
You can take the 10% back on their house, right?
Mm-hmm.
So,
Okay, so if I go find some land, But I don't want to build on it for a year or
Good
two.
luck with that.
Can I get a lot line from you?
It's developed land though, I mean, it's not undeveloped, I mean, it's a residential lot,
Or a farmer's lot, or, you know, piece of land
so that's
that might
different.
build on in your future?
A developed lot, we have lot loans, you betcha, that's, I mean, it's zoned residential, it's ready to be built on, and yeah,
Or if I
lot
bought
loans.
5 acres from a farmer, don't touch that.
Not
But if I did it as a full construction loan.
Would your
you could
commercial
do
side
that.
do it?
possibly, yeah.
John,
Yeah.
do anything?
That's
And
They
would you
should.
do that's construction? If you were.
Well, I'm looking at buying 5 acres and then building on it a year or two down the road, so could that be part of a construction loan, that will fire on?
Possibly,
I was gonna say, I don't really want.
possibly, but not me.
It's gonna have to be a big lien against your house.
Yeah, so the 5 acre piece, the 5 acre undeveloped part of farmer's land, yeah, it's gonna be through our commercial division, different type of financing, of course. Our commercial loans are good for 9 months.
Okay.
So no, it wouldn't be, so that situation 5 years out would not.
I think you would have to term that out over like 20 years and then just, when you do your construction loan, pay off your first one.
Exactly.
So you do a residential lot loan? So if someone's gonna buy a lot, not build for 2 years, you'll do a loan on the lot?
Yep. Yeah.
With 10% down?
20% down.
20%.
Yeah, lots of different construction, so.
Yeah, okay.
So for a land loan, if your commercial does it, is it 25 or 50% down, or do you have?
It's 20.
Typically 20, but you know, commercial, they're gonna look at the entire situation. They're gonna analyze all assets and financials and figure out what, again,
For you, 50.
even more so the uniqueness, right? I mean, if we're dealing with individuals, there's some pattern there that the commercial side it gets more complex typically, so.
20% would be cheap.
So on the lot loan, where do you amortize that out?
15.
15?
Years. Yeah.
Fixed for 15?
It's a 5-1R.
5-1.
Yeah.
Now, if a client came to you and took their savings account and dropped it into your bank or put it into a CD or something, does that strengthen them or not really? As a CD, it would surely.
How much money do you?
Well, if you put your money in there, it probably would.
Yeah, big chunk.
That's a great question along the lines of where we try to look at things, do they make sense, right? So let's just take that number and balloon it even larger, right? You have somebody who has a lot of unique things going on, they have a lot of assets that they want to bring to our company, you betcha. It's going to be easier for us to try to find a solution for lending them money if they're going to bring assets and become a strong member of our credit. So we do try to look at that holistic approach. You gotta be careful, obviously, because there's a lot of regulations and you still have to be able to qualify. But
Well, in that case, like, let's say that someone puts 250,000 in your bank in a CD or something, and can you loan based on assets? So there's no money, no, they don't have to put any additional money down when they buy. So let's say they went out and bought a home, they buy that.
In other words, can you lean on the asset?
Not
That's
exactly,
a tough
not
one.
exactly. We can glean income from assets for our in-house loans. We can take, there's a formula that we use, of course. So retired people, for example, right, they don't have as much, their monthly income. If they need to borrow a little bit more, we can use a percent of those assets for income, but.
Secondary has one too, but it's not as,
Yeah.
it's minimal, so to qualify for income.
What is your biggest frustration with realtors that you see out there? That they're doing stuff that it just freaks you out, and then you guys when you walk back in the break room, you just start cussing. I can't believe that they do this, you know? And I mean, obviously,
Hey, listen,
it's
don't
no
make it
here.
personal here, Mike.
No.
It's stay general, though.
It's just like, how stupid can they be for doing this? Or don't they get this? Or can't they just do this?
Usually it's I mean, we get why it's happening, we get it, right, because there's urgency, but it's the call to the cell, the call to the office, the text to the cell, the email within 5 minutes. Like right now, that could vary, I've got somebody might have done that all in the last 15 minutes. We're here talking right now, and I'm not gonna stop you. That person's gonna get upset, why did you answer my call, right? So, again, that's an area of opportunity for us. I'll be the first one to admit, we're not that full service as far as we're gonna roll out the red carpet, we're gonna massage your shoulders when you're sitting in the chair, and you're gonna feel great about how we treat you. We're really good at what we do. We know our stuff. We have awesome products. It's tough to get hold of us sometimes because we move. The reason we're able to offer such incredible terms, we operate lean. You know, we just last summer we surpassed Viridian asset size. We're now the largest credit union in the state. We have a fraction of the locations and I think half as many employees than what they have.
Sounds like somebody else's business model, right?
So yeah, I mean, we try to move quick, we try to move efficient, but then we try to prioritize too, right? And so, again, it comes out of a relationship. We have a good relationship with the real estate agent, with us, and we're working, we feel like we're working as a team. Absolutely. I think it can be a very rewarding, mutually rewarding and financially rewarding partnership. We can help you guys sell more homes with our products.
So I've got a question. Do you want text, email, or a voicemail? What do you prefer?
Any of them, just not all three within minutes.
Well, we're kind of trained to do that. That's what we do.
Say if you're not,
We gotta leave.
It's not responding within 5, you're getting the other 2. I'm just throwing that out there.
That's a good question.
Have a 5-minute rule.
I like that.
So,
I mean, I don't know. I don't need to speak for you, but we were just talking about that on the way over here.
That's a good thing that Nigel brought up, because if we knew what your preferred method was, when we ask our sellers and buyers which way, then we just know to go one way. I think what we're doing is we're probably guessing and hitting all three.
Well, and I ask my clients what they prefer, because if I get a voicemail, it comes through to my text, so I get it instantly anyway. But a lot of buyers, they've got to stop and be in front of a piece of paper and check their voicemail. They're going to respond much quicker by text or by email. And so I always ask clients, what do they prefer?
I'm a similar way. I mean, I think I just go with, okay, if they want to either do everything in person or through phone or text. I think text is almost, it seems like, as time is passing, everybody seems to be communicating that way. But I just say, hey, if you call, or if you get voicemail and you don't leave a message, just shoot a text or just send an email. I mean, I think either, we're gonna get the message regardless at some point in time.
So if we're working on a deal, my question, I think, with Nigel is, how do you want me to communicate with you? Would you prefer text, email, or voicemail? What's your
probably text?
You were text.
Yeah.
Okay. So that tells me, okay, if I'm going to communicate with you, I'll just do text. I won't use the other two mediums.
Okay.
Okay. Yeah, I'll send you a text right now.
So
practice.
Okay.
So if I need a pre-approval at 4 o'clock on a Sunday afternoon or 9 o'clock on a Saturday night, can you do that for me? Just curious.
Case by case.
You what?
Is
Case
it-
by case.
Yeah, it's.
Is it the first time you called him for a loan?
Case by case, but I'll push back and say, why the urgency at that point in time? What's happened prior to
If I'm in an
that?
open house on a Sunday afternoon, the person walks in, falls in love with it, I want them approved to write the offer with me before they go find another realtor. And so I've gone through a kind of a pre-qual with them, asked them some questions, like, yeah, they should be good. I need a pre-approval now, please, thank you. Or 8 o'clock on a Saturday night, they meet me in the bar and,
So what's your pull-through percent on that?
I'm just trying to find out if you work from 9 till 4, if you work from 4 till 9.
We work off commission,
Yeah.
as you guys do.
24/7.
What I would do, Nigel, is send a text that needs you to contact me, emergency.
Yeah.
Then.
Your mom.
911.
It takes one to quicken, see if they respond first.
Oh.
He's just harassing you.
Yeah.
He's just.
I need his face on either one.
He was harassing us out here, so.
Yeah.
Nigel Pyle wants to know, do you guys do loans on double wides by chance?
He's
got
got
enough.
Yeah, do you do manufactured homes?
in-house.
A pool.
No, you don't expect manufactured. Oh, can't get that one this afternoon then.
Green Tree. Is Green Tree still out there?
Green Tree?
As far as I know.
If you want to be
Scarlet.
If you want to be foreclosed on, yeah.
They haven't.
Very good. Any other questions? Anything you guys want to share?
No. No, I mean, our position, we want to help you guys sell homes, right? Help you guys sell homes, help us sell loans, help your clients.
We need to list homes too, so if you have any that need listed, we'll take those too.
Great. Well, I appreciate it. Thank you so much for coming.
Yeah.
Thanks, guys.
Thanks, guys.
Appreciate it.
You guys don't happen to have a list of